As this crisis continues to escalate, we see central banks preparing for collapse. You came here for the truth, so let me unveil that for you. There is much to discuss today. Let's get right into the big news, talking about the former chief economist of the BIS, talking about how he's worried about the extreme monetary policies worldwide. Some of these policies are what I have been discussing here. We're talking about negative interest rates, number one. That's, the big message of today, where the Swiss National Bank introduced these negative interest rates. And there are many reasons for that. We'll discuss some of those. And right here, he said this. In his opinion, there could be a counterintuitive effect of negative interest rates. To cover their losses, banks could increase the cost of loans. Now, there are, of course, many reasons why any country or any central bank would take certain actions. We have seen a lot of money inflowing into Switzerland, boosting up their currency. So I'll move on to the next article right here, where they said negative Swiss rates may not take much shine off the franc as a safe haven. This article is out of Reuters. So let's discuss this for a moment, where we have the Swiss franc obviously being seen as one of the safer currencies, the economy being one of the safer economies around the world. So of course, this is a dangerous time right now. Money is flowing in. But we see the bonds around the world offering, in most cases, 1% or less. We know specifically that we are in trouble right now when money doesn't have the same value that it once did. The Swiss are seeing what's happening, and they need to realize that they don't want their currency to appreciate too much, so they have to do things like negative interest rates in order to in a way, actually fend off from too much money flowing into their country. It's quite a paradox, but this has happened many times throughout history. Nothing new there. So let's move on and connect this in with this right here out of the information from the ECB. European Central Bank officials are considering ways to ensure weak countries that stand to gain most from the fresh round of money printing bear more of the risk and cost. How many times did we have to hear this? Back in 2008, 2009 and onward, we were hearing a lot of this type of talk, and we know specifically that it is just more rhetoric. It's just the talking heads up there discussing things that really don't have a basis in reality. They also said officials who spoke on condition of anonymity have told Reuters that the ECB could require central banks in countries such as Greece or Portugal to set aside extra money or provisions to cover potential losses from any bond buying, reflecting the riskiness of their bonds. This is what they'll say. However, it is always the individual citizen, never the government itself, never the central banks, never the big corporations like Goldman Sachs, like JP Morgan, who are going to have to foot the bill. It is always the individual citizens. That's what happened with the austerity packages that were put in place here, and we see nothing but unemployment rising in these nations. So as they continue to apply these policies like negative interest rates, like the money printing quantitative easing, we see all these different policies are doing nothing but increasing the unemployment rate. So we know specifically that this is harming the people. Bill Clinton's drive to increase home ownership went way too far. This article is out of Business Week, and it said this. A recently re-exposed document shows that his administration went to ridiculous lengths to increase the national home ownership rate. It promoted paper-thin down payments and pushed for ways to get the lenders to give mortgage loans for the first-time buyers with shaky financing and incomes. And then more recent data exposed how bad this really was. This is really a whitewash when you know how bad the loans became as the years went on. So we can get on with this actual document here. I'll show you it. I always, as always, show you the documents themselves. And this is pretty amazing the way they write this here. For many potential homebuyers, the lack of cash available to accumulate the required down payment and closing costs is the major impediment to purchasing a home. Other households do not have a sufficient available income to make the monthly payments on mortgages financed at market interest rates for standard loan terms. And this is where it gets really good. Financing strategies fueled by the creativity and resources of the private and public sectors should address both of these financial barriers to homeownership. They specifically said that they're going to get creative, and that's going to allow them to give more homes to people who actually can't afford them. And that's what happened. And then all we see is Fannie Mae and Freddie Mac with billions upon billions upon billions of dollars in these mortgages that are garbage, and they are now sitting on the back of the U.S. taxpayer. This is something that goes to show you how bad these government policies are when they implement them and they try and fix a problem. You cannot fix the problem by piling more of that problem on top of it. You cannot cover this up. This is one specific document showing you how they led into the housing crisis, and then of course that spun off into other things. This is out of USA Today, Fed to the rescue. You could see in just a few short days how bad the stock market was doing, and then right here the Fed came in and printed up all sorts of money. They buy the shares and really sent it up in almost a direct straight line, 421 points, the highest single day jump in 3 years. Now, what is making this go up? There's really no positivity coming from the economic statistics. We saw the Federal Reserve. The only thing that they said was that they're going to continue the same policies as they always do. So again, that's what gets the stock market going, not real fundamentals, not any sort of real economic factors here. It is just, will the Federal Reserve continue to print? Okay, and the algorithms continue to push that up. We'll move on. Out of the Washington Examiner, immigrant workers account for all employment growth since 2007. This is according to the Center for Immigration Studies. Now, the reason I mention this is that we're consistently given these statistics by the government, whether it's the unemployment rate, or whether it's the inflation rates, or any other factors. We look into this and we get the real data, and we know specifically that this isn't true. It never is. But here it is, a real statistic showing you that things are bad. When you know that the real people and the real economy is suffering, the Federal Reserve is going to be the only one to pick up the tab, and I'll get into that in a moment here. China's foreign reserves have started falling. You can see this over the past year, essentially, that China's foreign reserves have begun to decline. This is the in billions of dollars quarter over quarter change, just showing you this. Now, of course, they've gone up and down, and let's say over the past decade, they did rise, that's for sure. But we're looking at a situation where they are declining right now. And it's not just China, it's Russia as well. They are starting to sell off of their foreign currency, specifically U.S. debt. And this is just to mention, it's out of the Dutch bank. So let's move on quickly. Connected in with that is what I wrote about in my book, talking about how China has $2 trillion in treasury securities. But what if China stopped purchasing the debt of the U.S.? There are two possible solutions. Other countries are going to buy the debt, or the Federal Reserve is going to buy it. And we know what's happening here. Yes, the U.S. is the big country, the empire, and people all around the world, countries all around the world, hedge funds, every type of fund around the world is buying up U.S. assets, U.S. debt. So the Federal Reserve is definitely one of those, but it seems to be that over the years the Federal Reserve is buying more of that share, and the other countries are either sitting on their debt waiting for it to mature, or they're selling off of that debt. It's pretty amazing to watch it happen, watching it unfold, when the Federal Reserve will be the only one left standing at doing these purchases. And I wanted to just mention something that wasn't mentioned in previous videos, Russia gold holdings. You could see how this has been increasing over the past few years, definitely since the financial crisis, practically a straight line upward, and they're continuously buying. So there was some mention that Russia is going to sell off their gold in order to make up for the shortfall of their currency and the slide in their economy right now. But that is not the case. In fact, I believe it was 600,000 ounces that was purchased. And, this is something to look at here when we see the Russia Central Bank actually getting involved in the gold market more and more, and they are absolutely not selling off their gold, it seems. That's what I mentioned in the video previously, saying it doesn't really make a lot of sense for them to sell it off, and if they did, it would be a minor sell. They wouldn't exactly be getting rid of their whole share in order to make back what they have lost. And this right here is just something I wanted to show you for your own records. The history of Russian economic growth, GDP per capita, and oil prices. I'm just trying to show you some history on Russia itself. You can get a few little tidbits from this. If you don't know about Russian history, if you read this, you'll have a decent insight as to what happened and when. And I definitely suggest that every person should read it. It'll be in the description below. It is very informative and will give you some of that insight that you need in order to realize what's happening with Russia. This is definitely not inclusive of everything, and of course this is just some simple facts. Definitely recommend you take a look at it. If you found this video informative, please give me a thumbs up, and of course become a subscriber to the videos on here. There are now over 11,000 subscribers, and I hope that you will become one of them. Don't forget to become an insider. It's totally free. It's available at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.